Hello investors, welcome to the channel. For today's option strategy, I'm going to show you how to make weekly income using options. Now, here are the three scenarios. If you're trying to trade options for income and not want to look at your phone or your computer all day, then this video is for you. If you're trying to grow a small options portfolio, then this video is for you. Most importantly, if you're trying to become part of a weekly income team, then this video is most definitely for you. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. For today's option strategies, I'm going to show you how to make weekly income using options. Not only am I going to do that, I'm going to show you some safe option strategies while using safe stocks and in order for you to continue making weekly income. Now, you know how we like to do it. Let's go ahead and get down and dirty with options. For today's option strategy, we're going to be using none other than Advanced Micro Devices, ticker AMD. So we're going to go ahead and get right into it. Let's go to trade AMD options to open up the option chain. Now with this first part of the option strategy, we're going to go to buy and we're going to go to call. And now we're going to go far out. We're going to be choosing a very far out strike date. We're going to be going with the January 16th, 2026. Now, bear with me. I did promise you this is going to work if you're trading for small account and it's going to help you make weekly income. Do not worry about the stock. Focus on the strategies that you need to implement in order to consistently keep growing your portfolio. Now, another stock I would recommend to employ this strategy would be Micron Technologies. I'm currently using both Micron and AMD with this exact same strategy to keep building my portfolio. So now that we have buy and we have call and our expiration date far out, we're going to go ahead and we're going to choose a strike price and we're going to use the strike price below the current share price. As you can see, the current share price is trading around $120 per share. Now we're going to choose the $115 strike price. You can see strike price to the top and we're going to be paying $26.65. Now each option contract is multiplied by 100 shares. So in order to purchase this option, it's going to cost you $26.65 multiplied by 100, which is going to be a total cost of $2,665. If you're trading with a small portfolio, you will have around this amount in that portfolio. If not, try to build your portfolio to this amount. It's going to be worth your while, I promise you. This option strategy is going to be a long call option strategy or a leaps option strategy. In the option world, LEAPS option strategy is an acronym that stands for Long-Term Equity Anticipation Securities. Now, what you need to do is get a LEAPS option. What the LEAP option does is that it allows you to control 100 shares of a stock at a way cheaper rate. But we're not going to get into that. I'm going to show you how to use these strategies to make weekly income. Now, we're going to keep an eye on this figure here. This figure here is your delta. Your delta is 0.66. This is going to be important further along in the video. Now we're going to assume you have one LEAPS option in your portfolio. You spend $2,665 to get it. Because you have a small portfolio, there isn't much more you could do. All your money is locked up in this one trade. So now I'm going to show you how to use this LEAPS option in order to grow your portfolio. Now we're going to go ahead. We're going to choose a closer strike date. And for that, we're going to go with January 24th. And that gives us about 9 days. Now we're going to go ahead and switch up the strategy. We're going to go to sell and call. So what you're going to be doing, you're going to be selling weekly covered calls against your LEAPS option that you just picked up. Now with this instance, you want to choose a very high chance of profitability, and I will tell you why later. So let's go ahead and choose a strike price above the share price, and let's go with the $132 strike price. Now that gives us a 93% chance of profitability, which is extremely high. With the 93% chance of profitability, we will be paid around $23. Let's go ahead. We're going to click into it. So now that you own a LEAPS option in your portfolio, now you could go ahead and sell weekly covered calls and get around $2,300 on a weekly basis. This new option strategy is going to be known as the PMCC or the Poor Man's Covered Call. Now it does not end there. So what you're going to want to do is that you want to do this option strategy 4 times in a month, which should give you roughly around $100 return in free money. once this option strategy works for you. There's a very high percentage chance this option strategy works for you because you just saw it. This is why we chose an extremely high chance of profitability. Now, right before I go ahead and show you how to compound this $23 a week, I'm going to explain this to you just so you don't have any worries. So, if this trade were to go very badly, let's say the share price goes below $120, then remember, you did choose a strike price with your leaps option more than a year out. So, because you have that length of time, that gives this option strategy a lot of time to be able to withstand the volatility of the stock throughout the year until it comes to that date. Now, if the share price now goes above this right here, let's say a magic or a miracle happens and it goes to 132, well, now you're going to lose your leaps option. The reason why you chose a 93% chance of profitability is that you want to keep this leaps option in your portfolio as long as possible in order for you to continue doing this strategy on a regular basis. But if that happens and it goes to 132, then you don't have to worry. The result is going to be you're going to lose your leaps option, which means you're going to be forced to sell it if the strike price goes above 132. Now, because you're going to lose your leaps option, now you're going to have what's called capital appreciation. Meaning, when you picked up the leaps, your share price was around $120. Now you're forced to sell it at $132. So you're going to have a gain, obviously. The gain you're going to have is going to be 132 minus 120, which is going to give you $11. You're going to multiply that $11 by 100. Remember, each option contract is multiplied by 100 shares, and you're going to get $1,100. But that is not the entirety of your gain. Now you're going to multiply your $1,100 by the delta that I asked you to remember earlier in this video. Your delta was 0.66. You multiply 1,100 by 0.66, then your net gain is going to be $726 in addition to the amount of money you paid for this leaps option of $2,665. So your portfolio is going to be up to way past $3,000. That's if that is worst case scenario. So worst case scenario, you still win. Now, to continue showing you how to make consistent income and grow your portfolio, let's go ahead. So once you do this option strategy for, let's say, around 4 times, you should get around $100. That $100 is going to be free money. The free money you receive, you're going to take that now and you're going to go and you're going to reinvest it into growing your portfolio. And for that, we're going to go ahead and choose a different strategy. So let's go ahead and choose the Spider ETF, ticker SPY. Now that we're here on the Spider option chain, now we're going to go ahead and use that $100 of free money to generate an additional strategy to compound our weekly income. So now we're going to go ahead, we're going to go to sell and we're going to go to put. Now there's 2 strategies you could use. One of them is a bearish strategy, one of them is a bullish strategy. They both can be used. But I'm an optimist and I always think the market is going to continue to go up over time. So I'm going to start off with the bullish strategy. So we're going to go ahead and go to sell and put, and we're going to choose the strike date. Now, when you trade in the Spider ETF, it has everyday expiration dates, meaning you could do this every single day. However, remember, you're trading with a small account, and if you're trading with a small account, there are some rules you have to follow. Number 1 rule is going to be the PDT rule, which is pattern day trader rule. Please go ahead, type that into Google, and it's going to tell you how to avoid this rule and how, if you don't avoid this rule, it's going to affect your portfolio. So now we're going to do this trade just once per week. So we're going to be going with January 24th. So before I continue, remember, we're still making a weekly income of around $23 with our leaps option strategy. So now we're going to get additional income. So we're going to go ahead and we're going to choose a strike price now below the current share price. And now we're going to not have to go for extremely high chance of profitability. Let's hit around the 81% chance of profitability. So we're going to be choosing the 583 strike price. And then we're going to be clicking into this and we're going to be paid 166. Now we're going to go ahead now, switch over to buy and put. And now we're going to choose the strike price right below our sell call, which is going to be 582. we're going to go ahead, we're going to click into this, and now we're going to have to pay some amount of money because we're buying. The difference between these two is what now going to be our option premium. On this channel, we focus on doing option strategies. Once we do it, we receive premium. That helps us grow our portfolio. So the premium for this is going to be $15.92. Now, I did mention you're going to be using only $100. So now we're going to go ahead and hit review order. And there you have it. $100 you have, which is free money to you because that's your gains from the other option strategy. You're going to use it now and do this option strategy. So now on a weekly basis, you're going to be getting $23 plus $16. Let's round it off to like $40 a week. Initially, with the PMCC option strategy, you were getting around $2,300 weekly. When you go ahead and add this put credit spread to your portfolio, you're now going to be getting $40 on a weekly basis. So now instead of waiting every 4 weeks to make $100, you're going to be only waiting 3 weeks. Hence, you're going to now be able to grow your portfolio very quickly. Now, after you do this for 3 weeks, once everything goes in your favor, you should be able to now make an additional $100. So now your portfolio is going to be up $200, which is going to be the initial $100 you made plus this one after 7 weeks going to be $200. Now, do not use the $200 in order to do 2 of these contracts. This is how we fail. This is how we go back to scratch. You're going to continue doing this option strategy. Yes, I know it's boring. I know it doesn't make a lot of money, but you're going to continue doing this option strategy until you have grown your portfolio to $500. Remember, you're going to be making $40 a week. It takes time, but you're going to be learning along the way and you're going to be securing an extremely solid foundation where nothing could stop you. Now, the reason why I don't advise you using $200 in order to get more premium is because there's a chance that this trade could go against you. So we did choose an 80% chance of profitability, meaning that this trade is going to make us win 80% of the time. There is that 20% of chance that this trade could go against us. So that's why you keep the additional $100 in your portfolio. You leave that there for whenever the trade goes against you. You're still going to have free money in order to continue this option strategy. And that is how you make weekly income. That is how you build your portfolio quickly. And this is how you trade and not have to look at your portfolio all throughout the day. You could be at your 9 to 5 just relaxing while your portfolio is doing all the work. This is how you make weekly income. So if you guys get any value from this video, go ahead, like the video, subscribe to the channel. If there's anyone out there having problems growing a small account, feel free to share this video with them. And any questions you have for me, please leave it in the comments below. If you want to become part of the Consistent Income team, check out the first link in the description below. Until the next video, keep pushing your investments.